Global share markets have increased strongly on the first day of trading this week. In fact, they've seen some of their strongest increases for the 2011 calendar year. Investors have shrugged off any concerns of higher oil prices that we did see on Monday's trading as a result of further unrest coming through from the Middle East. Instead, investors have concentrated on the positive factors coming out of Japan and the fact that they seem to be getting some of their nuclear reactors under control. Further good news coming out of the US and the fact that AT&T have announced a major takeover for T-Mobile of around $39 billion was also a positive for markets around the world overnight. On Tuesday morning, the Kiwi dollar is trading at 73.35 against the US dollar and has strengthened further since Monday's trading. Last week, we did see the Kiwi dollar, the Australian dollar and the Canadian dollars and most commodity currencies fall against the US dollar as investors return to risk-averse assets, these being considered the US dollar. This was in context and related to the events we did see in international markets, specifically the Japanese earthquake, as well as further unrest out of the Middle Eastern area. However, if we do start to see some more stability out of the global marketplace this week, we are picking the New Zealand dollar to continue strengthening against the US. The slightly weaker New Zealand dollar has also been favourable to our agricultural exporters. Over the past week, we have seen a slight increase in lamb schedule prices, and this is a direct reflection of high international lamb prices, as well as a slightly weaker New Zealand dollar against the Great British pound. Slaughter levels have been fairly soft and global supplies are down, and this has underpinned short-term prices. We are picking that this dynamic will continue in the short term, but the key question will be looking out a little bit further, say out 3 years when we could start to see supplies increase out of New Zealand and Australia.